going to give Anne-Marie a second here to get her composure, and then we're going to ask her about Gilead Sciences. And I know that that's a stock that she likes to follow. She likes to trade quite a bit. First of all, like, how do you approach news like this? Because it's very significant that there were deaths in patients using the drugs. Longer term, you get one analyst come out and defended it. Do you let it affect your core position, or do you let it affect the way you trade for the day?
Well, here's what I notice about what's happening. I'll talk about it technically first. Gilead is in a little bit of a wedge formation, and so something is going to break. And it's been pretty reliable to pick up off of the 99, 98 area for a while. It'll just bounce from that region, but it's squeezing and compressing a lot, and it's starting to look a bit vulnerable. And so this morning's dip way down into these lower levels is really something that should put a little flashing sign there on you. Not that they didn't do that, but it's well below the dip from the prior earnings, and it's well below the dip from the prior breakout spaces. And so clearly there should have been a line of buyers that would have prevented that from happening, but they are gone. And so now, in order to reverse the direction, because this is a trading vehicle for me, and I don't hold a core in here. I just trade around whatever it is that it's doing because it's got great motion. Now I'm going to be looking for the failure at around 101, 102 to see if reversal is what's in the mix. Because if it can come into 102, lollygag around there, using that southern term, and then maybe drift through the 101 area, it's a really good chance that it comes down and kisses that 94 again. And then, we've got real trouble with this one.
How much significance? I mean, that was done during pre-market trading.
Yes.
So, there's a reaction, death of patients. The algos are probably hitting it. You get a big overreaction. Now, I mean, do you think that's a valid level? Do you think that's going to become, like, let's say it never even gets near that low today and it holds up at like 97 and change or 98. Do you look at that as a victory for the stock, or, I'm just trying to put the emphasis on pre-market versus, when all the big volumes trading during the regular session?
There's a really kind of a mix about what the technicians think about that sort of thing. We all know that volume matters. And if we come in and we price something, it'd be interesting to see what kind of volume and order flow we had down here at this 93 level, right? It drifted a little bit below 93, 92 or something, 92 and some change. And so it'd be nice to see what kind of volume floated around right there. But that's a significant number because it's tested it several times. It tested it in September. It tested it in December. It tested it in January. Tested it twice in December there. So this 93 number is not an alien event. It's actually a super valid number. The number that really is maybe a bit more valid is the 9580 number that's been tested February, January, December, and then back in September several times. If that breaks down, that's really going to be the kicker. But see, what happens with stocks is that when we start thinking about them, they give us these little warning signals that we have a tendency to ignore because of cognitive bias. And so we'll see a spike up really high that's aggressively sold down, or we'll see a pull back that's aggressively bought up. And we'll tend to ignore those peaks and valleys when indeed there's a lot of information being transmitted there. We just have to look at it contextually. So for me, this morning was a big red flashing sign that says, hey, you really have been picking this thing up every time it gets down to the 98, 96 level. And now you need to be careful about doing that because it's likely that the law of diminishing returns is going to be sitting, waiting for me.
So when you see a level get hit 1, 2, 3, 4, a few different times, you then become cautious when it's hitting the third or the fourth or the fifth time, Anne-Marie?
Yes, because the more you pound on a door, the easier it is for that door to get opened eventually.
Great point. With the pre-market trading, just a general question here. Do you put much relevance in the pre-market trading at all in your charts, or do you just look at just at the regular session for the most part?
I look at pre-market a lot.
Okay, you do.
And yes, I do. And it's the reason for this. The gamblers are out in pre-market. And what they do is
That's
they sort of test the floor.
I think half my volume is pre-market.
But they test the floor and they test the ceilings.
Right.
Right? And so when you have a floor and ceiling test in a limited volume range and it blows out of those regions, two things happen. If there's real power there, it's going to recapture that area, and the second it recaptures, let's say it fails the low. The second it recaptures the area, you want to watch for maintenance of that hold. If it does, it's going to turn out to be a great buy point, and it's probably going to accelerate into the ceiling and above met in the pre-market. Same thing. If it hits a ceiling in the pre-market and it breaches that ceiling and then comes back to retest it, if it holds the retest of the pre-market high, it means buyers are going to advance. It's going to be a great lift-off space. I am the fan of taking a trade on the retest of a level, never the breach or never the break. It's just more statistically probable that it holds, and I'm all about playing the probabilities. And if the probabilities say, listen, if the retest holds, you're 3 times more likely to have a trade that continues, I'm going to wait. And if it passes me by sometimes and I don't catch it, I can say, oh, well. Or if I trade the breach, I'm immediately ready to get out of the trade because I know there's going to be a retest at some juncture. So I'm constantly looking for a breakdown of acceleration in whatever direction that breakout or breakdown's chosen.
Great point, Marie, and we talk about that a lot. If a stock is finding a significant resistance level in the pre-market, looks like that's going to be the top. I think it was Imugen we were talking about today, and it looked like 9 was going to hold in the pre-market. It has rallied above that level, but sometimes when it comes back down to that level, if it can hold, then it will show strength. But if it doesn't, it's a good. So you're using the levels. You're not stepping out. And when you talk about the ceilings and floors, and stocks, Dennis, remember the one time you thought you saw that ceiling in Janus Fund, and it turned out to be the floor?
Oh, yeah, that wasn't a ceiling. That was just called fading news. I was trying to be a hero. I was like, oh, well, Bill Gross isn't worth 20% pop in this stock, is he? No, he's worth a 40% pop in the stock. So you learn the hard way there. Don't fade news. I'm sometimes a little bit too quick.
We got to talk about a little of the action for Friday here in the big dog Apple. They advertise the sell imbalance. The traders get all over that, knock it down. Now it's bouncing back. Is that part of your trading repertoire, when you're looking at these imbalances, maybe not so much to take a position, but if you have a position to use it to your advantage?
Sometimes, but again, what I try to do is get a blend of understanding news that counts versus technical formation. And so, though an imbalance does matter, it can quickly be resolved. very, very quickly. And so for me, if I am in a position and I see an imbalance and it's in the opposite direction of where it is and I'm going, I do have a tendency to tighten up the trade a bit. But it's not a general something that I go look for every day. Hey, listen, is it a buy imbalance or sell imbalance? I just don't focus there. It tends to become a little bit too granular, and it's not information that I can see shift. See, the reason that I don't focus on the imbalance too much is because I can't see the shift. I can see the shift if I focus on the candlestick formations, and that will tell me, hey, listen, you need to watch out. This flag is going to break. You've got to look at this support level. You got to look at that resistance level. If you think it's going to break out and all of a sudden it starts stalling, the charts tell me what to do. And so I have a tendency to listen for news that is fundamentally and structurally significant, and everything else I kick to the curb because I primarily focus on, can my candlesticks and chart formations lead me in that right direction versus listening to the news that may or may not affect the chart in the way that I anticipate it should.
Thanks, Anne-Marie. Just switching gears here to another stock, Lululemon, which is actually going to report earnings on Thursday. They're actually getting a price target cut here at Canaccord Genuity this morning, down to $55. Stock is trading down significantly in the pre-market, closed at $65.74. It's trading down here at $64 here right now. What are your technical thoughts on Lulu here? And if you're trading this, how do you approach a stock ahead of an earnings report? We're 3 days ahead of it here right now. When is it like a time where, because I know you're not a big fan of, I think, taking these stocks through the earnings reports. When is the time that if you were trading this for a technical trade that you might sit back and not trade it like ahead of the earnings report?
Well, I got to tell you, I've been looking at Lulu for a while, and I actually did a Tumblr post on it. I'm a Yahoo Finance contributor, and so on my Tumblr post, one of my last Tumblr posts, I have something about Lulu, and I said, what this chart, I had looked at it maybe, a couple weeks ago, and this chart has moved too fast, too much. And they're a little, to me, Lulu's a little bit structurally unsound. And some of the people that they've had at the helm have been a little colorful. And so if I'm taking a look at Lulu by itself, my thought was, hey, listen, if it comes back up and retests that 65 area and it can't hold it, there's going to be trouble, and we're going to see the 59 area. Well, that happened maybe 4 or 5 days after I put the blog post out, and it's accelerated right back into that 65, 66 area, and now it's crashing one more time. It seems very likely that it's going to revisit the 60, the 59 area. The chart fell out of a measured move, completed the measured move, and is now probably going to sit at this lower channel towards the 59-ish area in my mind. Now, as far as trading into the earnings, all of a sudden the chart has moved from giving us a range that's about $4 wide to being 2x, to being $8 wide in terms of motion. And so if the option chains can manage an $8 motion on either side, I don't know what the volatility is. It's probably spiked pretty high at this juncture. But to me, it seems like downside momentum is the most legitimate probabilistic formation for this chart, though I see that there are going to be people that believe that it should structurally hold this 60 area, but it may drop down into 59.
Do you take stocks through earnings ever, your technical trades?
Sometimes I will straddle, sometimes I will strangle, sometimes I will have an iron condor. It depends on how structurally sound the formation is. If I can tell where the lines of support and defense are for the chart, right? Structurally, if I can see a clean line of resistance and a clean line of support, I usually will take a position through earnings that way. But it's always hedged. It's never direct. Well, never. That's a bad word. It's rarely directional.
Anne-Marie, before I let you go, I just want to talk just general market here. Mr. Market, nice rally off the Fed news. That they took the word patient out, but put in another word. We rallied up. We didn't get quite to new all-time highs on Friday. Little weakness into the close here. Are you just looking for us to consolidate here at this $2,100 level and blast new all-time highs above 21.10 and a quarter, or do you think Nick would kind of characterize that rally like a relief rally? There really wasn't any new good fundamental news. There just wasn't bad news. Well, last few times we've been up at this level, we haven't been able to hold. Can you just give us your overall market thoughts?
Well, I think I'm going to stand on the second one that you mentioned rather than it breaking out to brand new highs. However, here's the thing. I see somewhere around 2140 as a potential test if it does break out and hold a particular formation that I'm looking at. However, what I really see is a lot of technical drift. And so I suspect that what we're going to have is that consolidation that's really a bit volatile. So we're going to have swings that bring us sharply into support and bounces that bring us sharply into resistance. But in the end, any breakouts we have or any breakdowns we have are going to be resolved back into the buying range, which seems to be between 2030 and 2112, my guess, is that sort of crunchy space. I really do think that we're going to spend some time just moving around in here. There's not a lot of technical momentum sitting here that says we've got enough to maintain a breakout. Now, if we break out and we come back and retest, and the retest holds, I'll be singing a totally different tune. But as of now, I suspect all the breakouts to fail and all the breakdowns to fail because we're going to come right back up into that channel. And I would say between March, April, even into May, we're going to have, I wouldn't even be surprised if it took us through the summer like that, unfortunately.
Yeah.
But I really don't see any shifts between quarter one and quarter two. Quarter three might be particularly significant, but the end of this one and coming into the next one, a lot of sideways action as far as I'm concerned.
Trade the range. We've been on the line with Anne-Marie Baiynd. She's an author and financial analyst. She joins us every couple of weeks on Monday with her cheerful voice, and love to hear you laughing. You're great part of the show. We appreciate it. We'll talk to you soon.
Thank you so much for having me. Take care, everybody.
Thanks, Anne-Marie.